Trump's 90-day pause on his reciprocal tariffs is set to expire on July 9th. Wall Street does not seem too concerned. The consensus is that either Trump, having blinked already once, will blink again, or that he will lower his sights and start closing deals between now and the deadline. Polymarket is currently assigning a 70% chance that Trump will cancel the majority of reciprocal tariffs before the deadline. The betting market is even giving a 40% chance to a deal between the US and the European Union, arguably the most difficult deal to pull off by July 9th. The bond market is so relaxed about the threat of tariffs that inflation risk premium has virtually disappeared. Two-year US inflation break-evens are back down to levels last seen during Biden's final days in office. The stock market is even more nonchalant. Between Liberation Day and April 9th, when Trump called time out on the trade war, the US stock market fell sharply, with energy, technology, materials, and consumer discretionary particularly hard hit. Since then, the stock market has not only recouped all of these losses, but racked up further gains. Indeed, tech stocks are now 20% above their high before Liberation Day. Even the cyclically sensitive industrial sectors is now 8% higher, and the consumer discretionary sector 6% higher than their highs just before Liberation Day. The same can be said about the currency market. Between Liberation Day and April 9th, most major currencies, especially those vulnerable to a global slowdown, fell against the US dollar. Some very hard. Since April 9th, the dollar has weakened across the board. Except for the Turkish lira, all major currencies are now trading above their pre-Liberation Day levels against the US dollar, regardless their sensitivity to global trade. Trump's one-to-many capitulations in trade negotiations have convinced the market that he does not have the stomach to go through with his tariff threats. The million-dollar question is whether the market will be proved right on July 9th.